I'm going to show you how you can import transactions in IIF files into QuickBooks using Z-Access. Now you might ask, why would you want to do that when QuickBooks has a built-in import feature for IIF files? So the reason why we've done this is because many people struggle with IIF files which may have errors in them and will not import correctly into QuickBooks. Or alternatively, they want to append additional information into the transactions, but they can't do that using IIF. Or they may just want to reduce the chances of data corruptions or errors happening in the QuickBooks file. So to show you what I mean, I'll run through a quick demonstration of bringing in some invoices in an IIF file. So I have here a sample of an IIF file which contains some invoices here. Now you can see this format is quite in-depth and confusing for the layperson to look at on the screen. So it's not a nice format for people to use to import into QuickBooks. Now I'm going to open that same file in Z-Access. So I browse to where that location I've saved that IIF file is, and I open it. And immediately you see a preview of the raw data that's in that file in this panel down the bottom. So to make more sense of it and to select the fields that we want to bring in, I've created a map. And here I've said the customer name should equal the name column in the IIF import file, the date, document number to invoice reference number, and so on. And down the bottom we've also included the item reference here. So with that map we've saved and we can reuse again, and immediately now you can see the fields and the corresponding data that's going to be brought into QuickBooks. So the final step in the process is to actually import those transactions. What we do is we take that data out of the IIF file, format it in, and import it into QuickBooks using the QuickBooks SDK. So the summary tells us those 4 invoices have been added in, and we'll just go through into QuickBooks and view those. So here we have, starting at invoice number 1010, 1011, and so on. So you can see those invoices have been created within QuickBooks. So that's just a great way that you can take IIF files that may have an error in them or may be broken and bring them into QuickBooks using Z-Access.
Payable. So now let's go pay the bill. Here we'll pay the bill. Landlord happy. Okay, we're done here. Notice accounts payable gone. Well, it was gone, but even if I go back to accrual now, it's gone. It's paid. Come over here, refresh the P&L. There's my rent expense again, $2,500, because now we're on a cash basis, and since it's paid, of course it doesn't really matter even if I go back to accrual, because at this point we recognize the expense either way. You know, we've already entered the bill and now we've already paid it, so cash or accrual, we've got the expense on the books, period. Income works the same way. Let's post an invoice to customer for services, and let's just say it's $1,000, $4,000. Right away, accrual basis shows up on the books, accounts receivable shows up on the balance sheet. Switch to cash. Income goes away. Switch to cash on the balance sheet. Accounts receivable goes away. Notice the cash balance hasn't changed. We already paid the rent, so we had the $10,000 less the $2,500. Gets me to $75. Now let's get paid. Let's say customer comes in and he says, you know what, you're so good, I'm going to pay you on the very same day you invoiced me. So now our income comes back on the books. Doesn't show up in the bank account yet because QuickBooks has a special account here called undeposited funds, which enables us, by the way, to group multiple payments together so that we can show them as one lump sum deposit in QuickBooks. Comes in handy because that way our QuickBooks check register matches the bank when we get the statement next month. So now we've got everything paid on both sides, income and expenses. So I've got my balance sheet, I've got my profit and loss. Cash or accrual, it's going to be the same. Switch everything back to accrual. And you might be able to see the picture now in terms of how normally, because any business we run, we're posting invoices, we're entering bills. We're not usually that fortunate that we have so much cash around that we can just pay everything as soon as we get the bill. You know, so that we would, in that case, maybe we could be cash basis because we would never have to carry a payable on the books. We just pay the bills as they come in. Even then, on the income side, we'd still be posting invoices because how else are you going to keep track of who owes you money unless you're running a retail store where everybody pays when they come in? So that's the essence of cash versus accrual. But I want to show you something else here, which, unfortunately, really, in my experience, not a lot of small business owners really understand this, the statement of cash flows. And the reason is most people who understand this are people who are in the world of finance. But people who have small businesses that, you know, maybe fix things or sell things or whatever they do, they just don't have the background experience and training, and they're not even aware of the importance of understanding the statement of cash flows. But what this does is it gets me, a lot of times the owners at the same time ask me the question that gets answered by the statement of cash flows. They say, I don't understand, Seth. I have net income of $1,500. Why don't I have $1,500 in the bank? And the answer is because of what's on the statement of cash flows. Yes, I have net income of $1,500, but I also put $10,000 into the account to get things started. And that's why I actually have $11,500 in the account. Now let's say I hadn't paid the rent. Drill in here, get rid of my rent payment. Delete it, close everything else. Accrual basis, I still have the expense on the books. Now the accounts payable comes back in, but the net income hasn't changed because I still recognize the expense even though I haven't paid it on an accrual basis. So I have the $4,000 in income minus the $2,500 in rent expense. I still have a net income of $1,500. But now what has to happen is because the $2,500 was deducted from the $4,000 to get to the $1,500. So now if I want to figure out because now the owner's going to say to me, why do I have $14,000? Shouldn't I have, you know, $10,000 that I started with plus the $1,500? Shouldn't it be $11,500? So again, the answer is I have the net income of $1,500, but because I haven't paid that expense yet, I have to add it back. I have to add back the $2,500 to get to what's in the cash, you know, what's in my bank account. So the $1,500 added to the $2,500, adding back the $2,500, gets me $4,000 net cash provided by operating activities, because I took in the income of the $4,000 and I didn't really have any expense that I paid, so I have to add that back. I get my $4,000, and then of course I have the original $10,000 I put in, which is how I get $14,000. Now where this becomes much more important and much more of a concern, frankly, is if it's the other way around, where we've paid for things but maybe we haven't collected all the income yet. That's usually where the business owners get more concerned, because then they want to know, where's my money? And that's when I have to show them the statement of cash flows to explain to them, your money is not received yet because it's still in accounts receivable. So coming up, I'm going to be posting an announcement on our QuickBooks blog at quickbooksnerd.com that we're going to be doing a live webinar that's going to go in much greater detail on the statement of cash flow. So I want to invite you to go into our Learning Center now and download this class called Understanding Your Financial Statements. What story are your numbers telling you? This is going to give you a very...
This is Seth David from the world-famous Nerd Enterprises Incorporated, bringing to you another special screencast. This time we're talking about how to record customer refunds in QuickBooks. Knowledge is power. Make an impact by learning more. Call me right now at 866-945-8070 for information about private trainings. We always record the live session with you so you can review it as often as you like afterwards. Also ask me about consulting services. Hi, Seth David here with a special screencast for you, brought to you by our QuickBooks Answers division, QuickBooksAnswers.info. One of our current members came in with a question, and I figured it was generic enough that I could answer the question with a video that I could also make public. So the question is, I've got a customer. I've invoiced the customer $2,500. They paid a $500 deposit, but then the customer turned around and decided they don't want to go through with it. So now I need to refund the $500 and also, of course, remove the invoice. I have to credit the whole thing. So we have to deal with two things. First, we have to only refund $500, but we have to get then the rest of the $2,000 off the books because it's no longer receivable. So the first thing we want to do is we want to come into customers, and we want to enter credit memos or refunds, or create credit memos or refunds. It's right here. It's about halfway down the menu under customers. So we click on that. Most people are good with that. And then, of course, you're going to want to choose the item that you chose when you originally invoiced them. And if there's more than one, you're going to pretty much want to mimic what the invoice did. So this way you're refunding directly against whatever you charged for. So it comes right out of your sales. So in this case, I kept it pretty simple, some service. Now, we're going to refund the full, we want to credit back the whole $2,500, but we only need to refund $500. So let's see how this plays out. Let's see if we get the options we need so that we can kind of split it up, because part of the credit's going to be used to refund the customer. The other part's going to be used to write off, to credit against what's remaining due on the invoice. So let's say we save and close. QuickBooks prompts us, what do we want to do? Retain as available credit, give a refund, apply to an invoice. So here's what I would do. I would say let's first apply it to an invoice, right? Because the only amount due on the invoice is going to be $2,000. So this way, it brings me up. It says, okay, apply credit to the invoices. Here are the invoices. The original amount is $2,500. The amount due is $2,000, so I can apply the $2,000, and I'll still have $500 left in credits available to be refunded. So now that I've saved that, it's got me back in the customer center. Let's go back to the credit memo. We'll double-click the credit memo, and then over here I've got use credit to, and now I can say let's give a refund, right? And now the only amount remaining to refund is the $500. So now we just have to choose how we're going to refund it. Which, if they paid by credit card, we can refund the credit card. And if you're processing credit cards with QuickBooks, you check off this option, and it will go on and process the refund. If you're using a service outside of QuickBooks, then you'll have to do it. Of course, you have to log into that system, issue the refund, and then either way here, what's important to note is that when I process this, and let's say it is by credit card, I click OK. So that's done. So now the credit memo is fully refunded. I can save that, but it puts it in undeposited funds, because what's going to happen is this credit is going to get processed. It's going to come through probably in a day or two or three, right? And so when I get funded for that day's sales, it's going to be reduced by $500. Now, if $500 credit winds up being more than what I've charged in the same day, then I get a net negative deposit, basically, is what it really amounts to, and that's the way it kind of works and looks in QuickBooks. It's the only situation where QuickBooks will let me record a negative deposit because it's coming from credit card refunds, and so it lets me actually book this from undeposited funds as a negative deposit amount, and it won't actually yell at me. So when I hit save and close, I can go look at my check register now, and sure enough, there it is, the $500 refund comes there in the bank account. Of course, that's got to match up with what actually hits the bank account. So, I hope this answers your questions. For those of you out there who might have been wondering the same thing, and to my client, who of course will remain confidential, I hope this helps. If not, of course, you know where to reach me. And for those of you who haven't ever reached me before for consulting or training services, we're available. Visit the brand new nerdenterprises.com at www.nerdenterprises.com. Check us out. Consulting services, training services. We do it all. And we do it all for you. Or give me a call. 866-945-8070. I hope you're having an absolutely fantastic day. And I look forward to seeing you on the web.